What's up, you guys? It's Greg. So let's talk about my experience with the BRRRR method of real estate investing. I'm going to go and throw up some video of the house that we actually did this process on, so you guys can kind of see the before and after. And if you want to watch the full video on that video is on YouTube. Also, if you want to watch any of the rehab of that rental property, that's also on YouTube. You just scroll back. It's one of the earlier videos. So this BRRRR method of real estate investing works really, really well, in my opinion, for people that, one, have a lot of money, or two, people that have some money and don't want to move super quickly. I kind of fell in that double whammy category, meaning that I didn't have a ton of money and I also wanted to move very quickly, meaning that I wanted to repeat the process as fast as possible in order to use that same money that I had to buy more houses. And when people talk about this, I don't think that people are thinking, hey, people are spending all the money they have to buy these houses and fix them up, and don't have the extra money to continue to buy houses while they're in this process, because it takes you 6 months to be able to refinance it since you've owned the property, meaning that you buy it and then you have to wait 6 months, even after it's rented out, in order to get a new appraisal to cash out, refinance that property, which was an issue that I had because I was done with it after 3.5, 4 months. We rented it out instantly, like within a couple of hours, and then I had to then I had to wait to refinance the property, which was not something that I accounted for. And during that process, because I had all my money locked up in that house, I missed out on a couple of deals that I would have been interested in. So let's take a look at the actual what the BRRRR method is. Just as a refresher, it's the buy, rehab, rent, refinance, repeat. Again, total investment at 75% after repair value. This ARV is after repair value right here. So where I messed up on the numbers here was, instead of the 75%, I was thinking that they'd give me cash back for 80% of the value of the property, not 75. So that actually caused us to have to leave money in that property, which was very frustrating. It ended up working out okay, because that property cash flows after principal, interest, taxes, insurance, maintenance, reserves, everything like that, just over $350 a month. So it couldn't have worked out any better. I think we only had to leave about $13,000 in that property. So everything worked out okay. Overall, would I do it again? Yeah, most likely. I'm actually placing an offer on a house to do this method again. But now I'm going to run my numbers correctly, and now I'm going to have better expectations going into it. So I won't be quite as frustrated during that process, which hopefully while watching this video, you guys can avoid some of that as well. And you rehab the property just like you do with any other rental property or a flip property. Rent for top dollar, because it's just been renovated. So rent for top dollar. I think the houses when we did it were renting for $1,650, maybe $1,600. We asked $1,800 and got $1,800 in, I think, about 6 hours. And we had multiple applications. And then since then, prices have continued to gone up. So that was really, really good. But we did a good renovation on it. And the refinance, again, the cash out ARV after repair value of 75%. This is a big deal, because if you're trying to get all of your money back out, or if you're trying to get extra money out of the property, you need to have these numbers correct. You need to know that, hey, they're only going to give me a cash out for 75%. It can't be 80. It has to be 75 because it's a investment property. I'm not going to live there. It's a rental, all these other factors to it. Granted, you're probably going to want to talk to your mortgage lender about this, which I didn't do until we were already, it was already too late. I bought the house, I'd renovated it, I'd rented out. And then I'm like, hey, this is what it is. And they were like, oh, we can only do 75%. Yeah. And the refinance appraiser appraised it lower than what it should have been. So just be aware of that run your numbers at 75% for ARV of what you can actually pull out of the property. And also, because it's a investment property and you're not living in it, I would calculate your interest rate being a little bit higher than you think it should be. Meaning, like if a typical 30-year is at 3% or whatever, you add 0.5% for an investment property. But then because it's a cash out, depending on your lender, they might charge you a little bit more. I got charged more on interest rate than I thought it was going to be. Granted that there's fluctuations in the market. I'm not a mortgage lender. I'm not an expert on that field in any instance. But I feel like it was a little bit higher than I wanted it to be, or that I was expecting it to be. So that was just another reason that I had messed up on my numbers. So now that we've talked about that, as long as you can avoid my issues of calculating at 75% and not 80% for the cash out and what they will give you back, knowing that it will take 6 months for them to be able to reappraise your property and give you a cash out refinance, and that your interest rate will be a little bit higher than you probably expected it to be. If you can avoid those, then your experience will probably be a lot better than mine. Mine is really annoying. My loan officer is just not that great. So between all those things and not having a great loan officer, it overall was not a good experience. But I do see how a lot of people do it and why it's necessary. I'm actually placing an offer on another property either today or tomorrow, I don't know, whenever the paperwork comes to me, to do this method again. And again, it's going to be one of those ones where I drain basically our entire bank account, buy this property, renovate it, rent it, and then refinance it. So it is a good way to get into properties, especially when you want to pull as much money out as possible. But anyways, if you like this video, it'd be really cool if you'd hit that like button. That would really help the channel out. It really helped me know that, hey, these videos are pretty decent and that people are actually watching them. Or also, if you like the new lighting setup that I got, it's not quite so dark in here, but that'd be really cool if you'd hit that like button. But anyways, please browse the channel and subscribe. I will catch you next video.